All right, good afternoon, trade pros. Just getting this thing started. Just gotta wait to see myself on the YouTube channel so I can see your comments in there. And once that gets going, I will start this broadcast. Just a bit of delay between the time I actually started. All right, there we go. Perfect. All right, guys, welcome to our final update of this week. This is Mark from Trade Pro Academy coming at you guys from our headquarters here in sunny Toronto on today's date, Friday, July the 26th, 2019. So welcome one, welcome all. If you guys are returning viewers, welcome back. If you guys are new viewers, welcome, welcome, welcome. So let's go ahead and get started here, guys. I've already mentioned the date. Let's take a look at some of the key economic indicators that came out today, this morning. Georgie covered a majority of them during the morning update, but I will take a brief look at what has come out, and we'll cover some of the squawks that we saw throughout the U.S. session. Morning, Will. Hope everything's well down in Cancun. Hopefully bring that weather down with you in September. U.S. session. So what we had on the U.S. session, kind of the main headline driver was that advanced GDP, the Q2 advanced GDP figures. I was talking about this all week with the sense that these are basically, you have GDP figures come out. You have three different readings, and the advanced one is obviously the first reading that comes out. And so that one is kind of the most important one because the other two are kind of already baked in based on what you see from the advanced GDP. So this one is a key one. And what we saw today was that it came in at a surprise. The previous quarter came in at minus 3.1%. And this quarter was expected to come in at 1.8% expected. And we came in at 2.1%. So that's what that looks like. Personal consumption as well came in at a bit of a beat, 4.3% versus 4% expected. So we saw an initial little dump in the equity futures indices, or the equity indice futures on the back of that report. And basically what that is kind of aligning with the sense that, inflation is kind of coming in line with what the expectations are. And this is kind of, taking away from a bigger rate cut than expected, coming into the July 31st meeting next week. So next week is going to be a big week for the markets, especially on the 31st. That is a Wednesday, so make sure to mark out your calendars. On top of that, we'll also have crude oil inventory. So Wednesday, if you got 1 day to trade next week, Wednesday would likely be that day. Expecting a lot of volatility on crude and in these equity markets. If you're a trader of anything, really, it's going to move on Wednesday, whether it's equities, currencies, FI, fixed income, whatever your game is, whatever your arena is, it's likely going to move. So that being said, that's basically all that we had on today's session. A couple of squawks coming out from China and from the U.S. So out of China, we saw White House Economic Advisor Kudlow mention that wouldn't expect any grand deal with China next week. Hope talks next week set stage for going back to where they were in May. So kind of trying to set expectations here for that meeting. We did catch a little bit of a bid in the early week on the back of reports that, Trump was sending a team over to China for next Monday. So this Monday coming up, expect the team to go out to China. And we'll see. That's also going to be another big reason why a squawk is going to be important, because I can almost guarantee we're going to be hearing some sort of tape bombs coming through if that does go down. Also in today's U.S. session, President Trump reportedly held a cabinet-level meeting on Thursday to discuss ideas on how to weaken the U.S. dollar, including capital controls and jawboning by administration officials on TV. So this is something that I've been mentioning as kind of like a speculation, since the beginning of 2019. And, all these tariffs, that U.S.-China trade war dispute, even the U.S.-Mexico one that happened, a couple weeks back, I was always under the opinion that, Trump's been very vocal about his stance on the Fed and, where they're going versus where he thinks they should be going. And as a result of that, I was kind of the opinion that, Trump is going to take whatever means he's got in his power that he can control in order to devalue that dollar. And you've seen since 2019 started, dollar upside has been capped at the 97.71 level. And it's kind of no real surprise to me. We did a YouTube video on that at the end of December 2018, and that's kind of what we were saying. The Fed's not doing what he wants them to do. He's going to take into control, or he's going to take measures into his own control, and he's going to do what he's got to do to get the results that he wants. And unfortunately, that result was starting to apply tariffs, starting to apply the tariff game. And so he's starting to get what he wants now, as the dollar is climbing up to, 2019 highs, which I believe we're at the 98.30s, somewhere in that level. I think we cracked 98 today. So it looks like we're making a run at those 2019 highs. Is it really any surprise that you see a squawk like this coming out as we're coming into new highs, that he's looking for ways to weaken the dollar? No, not really that much of a surprise. So, all of that aside, let's get into the actual charts. Let's get into the quote board, see what the volume's looking like, and set you guys up with some levels into the remainder of today's session. So let me switch off the camera from myself onto George. There he is. And here's a quote board, ladies and gentlemen.
That looks disgusting.
So let me get my pen tool out. All right. So here's the pen tool. And what we'll start with up top, you got crude oil futures. Crude oil, relatively light volume today, 360,000 contracts. If you've been watching this over the last couple of weeks, you'll know that on average, we've been seeing anywhere from 5 to 5.5 thousand contracts on the session by this point of the day, sitting kind of well below that. And we did have a initial spill on crude off of the open. However, it looks like the buyers are recovering those losses, and we're almost back at the open right now. So that's what crude's looking like. Not very directional on today's session, just kind of almost a V bottom, if you will. We'll take a look at that on the charts in a sec. Crude or S&P 500, very light volume, 567,000 contracts into today's session. You are getting an upside move, but this is on light volume. So not really looking for too much here. Doesn't seem like there's too much behind that move. We are seeing a little bit of volume on the tick charts, but as far as the quote board, for this part of the day, very, very light volume. I'm kind of looking for this volume to start increasing as we come into that Wednesday of next week with FOMC right around the corner. So that's what we got on these guys. Daily change percentage, they're about the same, 0.5% up, both of these markets from the previous day close, which does make sense. Crude oil previous day close was 55.93. We're at the 56.92 last traded price. SPOOs, 3,004 was our previous day close. We're at the 25 at the moment. That's where your change percentage comes from. So, we are bullish on the SPOOs. Crude oil is kind of neutral, but that volume is not really having us licking our chops or anything like that. So, light volume, not really looking for too much, direction on the remainder of today's session. That being said, what we've been seeing the last couple of weeks was weakness off of the open and a ramp into the close. And we did see not that much weakness. Most of the weakness today came before the U.S. cash market opened on the back of that GDP surprise. But, SPOOs and the other equity indices kind of recovered that into the cash open. And now we are trading towards all-time highs, at least on the S&P 500. So looking at the pivot chart, crude, this is kind of a perfect indication of what we are seeing today. Just a chop kind of between the S1 and the R1. That's kind of the range that we've been stuck in. And, pivot, I want to say this is a key level, but just looking at the way it's traded overnight and into today's session, you can almost ignore the pivot just because it's not really holding a support resistance. It's poking its head above, below, back above, back below, and we're currently poking our head back above it. So when you see this kind of price action, what you would like to do is kind of ignore that pivot and just use the R1s and the S1s as your extreme. So, if you're looking to short, you'd want to short near the top of structures right around those 56, 70s. If you want to get long, you'd want to do it right around the lower end of that structure, being your 55, 50s. So that's what we're seeing on crude. S&P 500. Oops, there's that move. So what we were saying yesterday is, that stop run had the potential to get us back below previous swing lows. We were talking about that being between those 3,000s and the 96s yesterday. And you can see that's kind of where we came right into, and we've bounced off of that overnight. We've held the pivot twice today, and we've pressed off of that coming up into our R1. And again, all-time highs right around these 30-30s. I think the actual all-time high is right around the 30.28 if we're going to refine that level. So that's where we're standing currently at R1. Where's the R2 at? R2 is a little bit higher. Yeah, so R2 is a little bit higher. So essentially what I'd be looking for, on today's session, just a retest of these all-time highs, 30.28. Whether we break them or not, TBD, but that kind of looks like the target for today's session. I mean, we are within 4 points of it. So upside is the right side. We are currently above the R1. The R1 is at the 22, we'll call it 22 3/4. Only thing is this bar right now is just forming. We are only 14 minutes into the hour, so see what this does. But if we get that close above the R1, at that point, I'd kind of anticipate that press into those previous all-time highs and into fresh all-time highs. So that's what we're seeing on that front. On our actual charts, let's have a quick gander. So we are at a pretty good level right now, to be quite frank. In a bit of a range, we had our open right around these 56.50s. Nice big dump off of that open. Didn't even take a stab at the opening range. At the overnight high. Just dumped straight off of the open. Quite a bearish indicator. Now we're kind of at that 5-day point of control. You can see that's held as resistance once, rotated up, big sell-off. That was number 2. Now we're kind of finding some, there's a big battle in this area, between the buyers and the sellers. As you can see, we're kind of starting to form some bullish structure. We did get back up above that point of control. Now we're kind of just rotating it, and we'll see what happens here. If the bulls are unable to get back above that open, you'll likely see another failure around that zone and a press back lower. However, if they maintain to hold this, get back above the open, that point, you can look for a move to the overnight high, potentially rotate back down, find support, and look to ride this thing back up into those 56.70s, potentially that previous day high up above in those 56.95s. That's kind of what we're seeing there. Failure to get back up above that level. You kind of got some support coming in here with your VWAPs. So it'd be tough to short here. There's a lot of stuff in the way. So even though it might look like a good short, I'd probably be staying away from that idea at this point in time and just kind of letting this play out. Or better yet, start your weekend early. It is noon. European traders are gone for the day. U.S. traders are on lunch at the moment. And so I wouldn't really be looking to do anything in this market at this point in time. Maybe, around 1:45, 2 o'clock, could look for a potential pit fade kind of trade. But at this point in time, I just anticipate more consolidation on that market. On the S&P 500, what you guys are seeing is yesterday's price action and today's price action right in here. So yesterday, pretty bearish day until it wasn't. And we didn't quite close back at the open. We closed down at the 04s, but overnight, you can see we kind of climbed up and opened up near that overnight high of the 17-quarter. And so we broke up above that level, kind of consolidated the open, held the open, and then pressed up off of that open into these new current session highs. And so at the moment, we just popped the value area high here. What you have potential for at the value area high, all considering the fact that it was a pretty quick run up, is that we get a little bit of a pullback. And you guys are seeing at the moment, you've got some bids creeping up. Those look like they're sitting at the 21.75 at the moment. And that kind of lines up with this previous resistance top, which should act as structure support on the way back down in order for a potential press back up to all-time highs. So that's kind of what we're watching on these two markets here. Let's go ahead and wrap this guy up with a look at our TradePro Performance Index, which is right here. All right, so giving back a bit of gains on today's session, a little bit more difficult to trade the equity markets. Today, overall, still a positive result. 58% were positive on the session. Just under 50 were up, just under 10 were flat, and just under 42% were down on the session. So overall, average remains around 65% on the month. And we look to close out July on a strong note. Got 3 more days of July. And like I said earlier, expecting fireworks on the 31st. That is a Wednesday, as we've got FOMC and we got the crude oil inventory reports. So that being said, if you will be trading into the remainder of today's session, you know the 3 rules. You got to remain patient, you got to remain diligent, and you got to remain disciplined. If there's no questions on the interactive chat, then I'm going to wrap this guy up and get back to work here on my end. So hope you guys enjoyed that one. If you did, you know what to do to let us know that you enjoyed it. Like the video, comment, subscribe, and refer our channel over to a friend or family member or colleague, anybody that you know that might be interested in trading. We'd really, really appreciate any referrals. That's really the best example of a compliment to us, is referring one of your friends or family. Really the highest form of a compliment. So hope you guys have a great weekend. Everybody in here, Will, I think that's Francisco in there, William, Craig, Gonfer, don't know your name, but you guys all have a great weekend. We'll catch you back on here on Monday, and we'll catch you on Monday on the daily update with George, and then we'll catch you in the afternoon with me here, giving you guys more of a technical view on these markets and what we're looking for. So that's everything for me. Have a great weekend, guys. Take care. Ciao.